Ethereum and Bitcoin just closed the week. Ethereum just lost 185k. Bitcoin is parked right on 62.5k. Those two levels decide everything this week. First, last Monday's call checked against the tape. Then both weeks replayed candle by candle and the exact maps for the week ahead. And stay to the end because this week the charts have a special guest, the Clarity Act. It has every chance to break all of these plans. And it has been hanging in the air for a year with no final decision. This week there is finally a date. Let's go. Last Monday's call checked against the tape. Ethereum lost 194k and hit 184k. Bitcoin lost 64.5k and hit 62.5k. First, the full picture. A month of candles, so every level on this chart has its history behind it. Now watch the gray band. That is the last 7 days, Monday to Monday. We are going to zoom straight into it and break down exactly what happened to Ethereum this week, candle by candle. Ethereum traveled 6% this week between 182k and 198k, one directional move. Sellers walked it from the upper boundary down to the lower one with barely a pause. And this time the level did not hold. It broke, and a broken support is resistance until price takes it back. The week closed weak near the lows 4% off the high. This zone gave way during the week. And look at the red band up there, 6 times into it. 6 times turned away. Watch July 30th. That rejection is why the back half of this week went down. That leaves 185k as the pivot for the week ahead. Price finished right at it. First the frame, we are off the hourly onto the daily months of history on one screen. And one standard throughout. Broken means a daily close through the level. A wick is a test, 2 scenarios, and 1 honest third. First, the bull scenario. What if buyers reclaim 187k? Watch the path, the break, then a retest of 187k from above. That retest is the tell, then continuation into 194k. And why 194k? Not some round number nearby. Because price traded into it 4 times between June and July, and sellers defended it every time. That is a level the market remembers. And the rule is simple: if the break fails and price falls back inside the zone, the scenario is off. Now flip it, the bear scenario. What if 183k gives way? Same logic in reverse. The breakdown a week bounce back into 183k and then the slide toward 176k. 176k is not a guess. Price fought over that area 6 times between June and July, and buyers defended it each time. Same rule in reverse, a reclaim back above cancels it. And if the catalyst does the moving, this does not have to stop at 176k. The red path runs onto 158k. The next area price has to deal with under it. That is the extension, not the base case. And the honest third outcome: if neither breaks, there is no trade patience inside the levels. Only measured levels are marked on the chart. Now Bitcoin, same process. A month of tape first, so the levels carry their history. Now watch the gray band. That is the last 7 days, Monday to Monday. We are going to zoom straight into it and break down exactly what happened to Bitcoin this week, candle by candle. The numbers for Bitcoin: 5% of travel, 62.5k at the bottom, 65.5k on top. An early drop to the lows, a bounce that stalled, and a rollover into a second look at the same lows right at the close. And price is parked right on the level as the week closes. Nothing is decided yet, that is the setup. And the finish: 5% below the week high, closing down near the bottom. Price walked into this zone and is still inside. Same shape here, the red band above price. 3 times into it, 3 times turned back, the last one on July 31st. Sellers are still the ones defending that resistance, and price has not beaten it yet. So 62.5k is the line the next section is built on. The week ended right at it. And the same standard applies, not broken until a daily candle closes through it. Same drill for Bitcoin, the daily map, and the same standard. A daily close through the level or it did not happen. Upside first. Sequence to watch, through 63k, then a hold above it on the retest. That hold is where you learn whether the break is real, and then the push towards 64.5k. The reason for 64.5k is sitting on the chart behind us, over and over between June and July. Price came into it and sellers defended it. Fail the hold, drop back inside the zone, and the setup is gone. And if it goes the other way, 62.5k snaps, price back to sit from below, and 61k comes into play. Look left and 61k explains itself. Stop price 6 times between June and July. Lines like that do not go quiet. Watch the speed of that backtest. A weak, slow bounce tells you sellers are in control. Climb back above 62.5k though, and the bear case is cancelled. And if the catalyst does the moving, this does not have to stop at 61k. The red path runs onto 58.5k, price bottom just under there before. That is the extension, not the base case. And the honest third outcome: if neither breaks, there is no trade patience inside the levels. And notice the split. Ethereum and Bitcoin tell different stories this week, and disagreement is itself a caution sign. The end card holds both maps, one screen, every level. And here's the condition I promised at the start. This week has one scheduled catalyst, the Clarity Act, the Digital Asset Market Structure Bill. Cleared the House last July and Senate banking approved its version in May. What it still does not have is a floor vote or a date on the calendar. August 7th is the last scheduled Senate workday before the recess. If it moves, headlines lead and levels follow. That is what cancels both scenarios on both charts. No break, no trade, and no chart survives a headline it did not price in. So, what do you think about this week's price action? Post your thoughts in the comments and screenshot these levels because next Monday we check every one of them on the same charts.